Say baby sweet and vanilla. I don't notice. Say I know fit.
Hello and welcome to Tax File. I am Lauri Bala Hassan and it's great to have you join us for another insightful episode of Tax File. We'll begin as always with the latest tax headlines, bringing you up to speed on important developments that may affect you. Next is our Did You Know segment where we share useful tax tips and interesting facts you may not have come across before. Then we head out for our Vox Pop, gathering genuine opinions and perspectives from members of the public. In the Knowledge Zone, we examine those views more closely and offer clear explanations to help you better understand the issues. Our Professional Insight segment will also feature experts who provide valuable perspectives and practical advice on key tax matters. And to round things off, What's on the Net brings the highlights from the conversation, comments, and questions shared by our online community. Stay tuned as we dive into today's episode. And now, the news. The executive chairman of the Nigeria Revenue Service, Nta Akure, has reiterated the importance of collaboration between government agencies and the private sector in driving economic growth. This came during a recent meeting with the leadership of one of Nigeria's leading airlines. Amachido has the reports.
The executive chairman of the Nigerian Revenue Service, Nta Akure, recently received the chairman and chief executive officer of Airpeace, Dr. Allen Onyema, on a courtesy visit at the service headquarters. The meeting provided an opportunity for both leaders to discuss the current state of Nigeria's aviation industry and its critical role in driving economic growth and national development. During the discussions, emphasis was placed on the importance of efficient tax administration and improved revenue collection as key drivers for strengthening the aviation sector. Both parties highlighted the need for continued collaboration between government institutions and private sector operators to support sustainable growth, enhance compliance, and contribute meaningfully to Nigeria's broader economic development goals.
Recently, Finance Minister Wale Edun assured that the new tax laws will be implemented with transparency, fairness, and equity. He signed the presumptive tax framework, which allows authorities to estimate earnings of informal businesses based on visible trade and skill rather than audited accounts. Ejura Etu Okpanachi has more.
The framework exempts nano businesses and bans the use of roadblocks for tax collection, signaling a shift to technology-driven administration. Meanwhile, in a cabinet shakeup, President Bola Ahmed Tinubu has nominated Taiwo Oyedele as Minister of State for Finance, replacing Doris Anite Uzoka, who moved to the Budget Ministry. Oyedele, a seasoned economist and former PwC Africa tax leader, previously chaired the Presidential Committee on Fiscal Policy and Tax Reforms. His nomination has been confirmed by the Senate after he had been cleared by the lawmakers. This move marks a significant step in Nigeria's tax reform journey aimed at boosting inclusion and fiscal stability.
And in a bid to modernize Nigeria's revenue administration and align with international standards, the Nigeria Revenue Service welcomed a high-level delegation from the Association of Chartered Certified Accountants. Swateku has the reports.
The executive chairman of the Nigerian Revenue Service, Dr. Nta Akure, received Helen Brand, chief executive of ACCA, alongside Tom Isibo, country head of ACCA Nigeria, and their team during a courtesy visit. The discussion focused on strengthening collaboration, advancing capacity development, and embedding global best practices in tax administration. The visit highlights NRS's commitment to building a modern, transparent, and efficient revenue system. By partnering with ACCA, one of the world's leading professional accounting bodies, the service aims to enhance staff training, improve compliance, and ensure Nigeria's tax administration keeps pace with global standards. This collaboration is expected to boost efficiency, foster innovation, and support Nigeria's broader economic reform agenda.
And that's a wrap on the news. Let's now join Mariam Julde Adura on the Vox Pop segments.
Hello and welcome to the segment. My name is Mariam Julde Adura, and today we will be looking at punishment for offenses that fall under the criminal liability under the New Tax Act. Come. So under the New Tax Act, what is the punishment for offenses that fall under criminal liability?
Under the New Tax Administrative Act, the punishment is for the person to either be in prison for not less than 3 years, or to pay a principal amount, or plus 50% on the principal amount, or both.
Under the Nigerian Tax Administration Act, pursuant to Section 107, subsection 3, it provides that where a person is convicted for an offense under the Act, upon conviction in court, the person will be liable to a term of imprisonment of not more than 3 years, or a fine of an amount that is not less than the principal sum or principal amount for which the person has underdeclared, or as the case may be, plus a penalty of 50% of the sum, or both imprisonment and fine. That is what the law says.
Under the Nigerian Tax Administration Act, a penalty of no more than 3 years imprisonment, or a fine of principal amount along with a penalty of 50% of the principal amount, or both.
The punishment that falls under criminal offences under the New Tax Act is 3 years imprisonment. Upon conviction though, 3 years imprisonment, or the principal amount, or an amount not less than the principal sum, not less than the principal sum, and 50% penalty, or both.
Under the New Tax Act, what is the punishment for offenses that fall under criminal liability?
Okay, thank you for your question. Under the New Tax Act, the punishment is a prison term of not more than 3 years, or a penalty of the total amount or the principal amount, plus a penalty of 50%, or both.
So when we say criminal liability, please can you break it down? What does that mean?
Okay, criminal liability means that when it gets to the point where a taxpayer is convicted by a relevant court of jurisdiction, they can be given a penalty of either a prison sentence or a payment, a sum which they're expected to pay. So in a case where it's the prison sentence, it doesn't go beyond 3 years. But in a case where they have to pay the sum, then they'll pay the actual principal amount that they were due to pay initially, plus an additional penalty of 50%. And in a case where they meet a judge which is not so happy, they might grant them both.
Okay. So when you say criminal, what is a criminal act under the tax laws?
Okay, so a criminal act can be a variety of offenses. It could be a failure to file a supplement due. It could be a failure to, after withholding or collecting taxes, failing to remit to the relevant tax authority. Those kind of actions can be categorized as criminal acts. And then when they are convicted by a court of jurisdiction, of course, they are expected to pay the penalties as the law stipulates.
know offenses that attract criminal liability are punishable by fines, imprisonment, or both? For more information, please visit www.nrs.gov.ng.
Ashu Abe takes us on the Knowledge Zone.
Hello and welcome to Knowledge Zone, where we dive deeper into interesting conversations had on the streets. I remain your host, Ashu Abe. On today's episode, we'll be talking about what is the punishment for offenses that fall under the criminal liability in the new tax law. Under the new Tax Administration Law 2025, offenses that attract criminal liability are punishable by fines, imprisonment, or both, depending on the nature and severity of the offense. Generally, where a person is convicted for an offense under the tax law, such as tax evasion, failure to remit tax deducted, or other serious violations, the person may be liable to imprisonment for a term not exceeding 3 years, or a fine not less than the principal tax due, plus an additional penalty of up to 50% of the amount, or both imprisonment and fine. In addition to these sanctions, the offender is still required to pay the outstanding tax and any applicable administrative penalties and interest. The law also prescribes stricter penalties for specific criminal offenses. For example, making false statements or submitting fraudulent tax returns may attract a fine of 15 million naira or 1% of the tax liability, whichever is higher. Imprisonment for up to 6 months or both. Similarly, offenses involving obstruction or assault of tax officers attract heavier punishments. Carrying a weapon during a tax-related offense may lead to imprisonment of up to 5 years, while injuring a tax officer while armed can result in an imprisonment of up to 10 years. These provisions reflect the law's intention to treat serious tax violations not merely as an administrative default, but as a criminal act subject to prosecution and substantial penalties.
And now to our professional insight segment.
Okay, my name is Dr. Andrew Ayabam. I'm the Director of the Medium Tax Department, North. Yes, provides the tax functions and audit functions for mid-tier taxpayers with turnovers between 1 and 5 billion naira, located in Abuja and all of the North. Okay, one, Abuja is part of my coverage area, and Abuja indeed has the largest number of taxpayers within the department. So the responsibility is largely within Abuja. Let's say about 75% of that population is within Abuja. Of course, with technology, we're able to engage with taxpayers as well as staff and monitor compliance from even remote locations. But part of the schedule or responsibilities include engagements, physical engagements, at least on a quarterly basis with the other locations. We also have a regional structure. So it's not every state that has the presence of the medium tax office. In fact, we have 2 other offices outside of Abuja, one in Kaduna and another in Kano. There's a plan by management to create another between Gombe and Bauchi, but that should come out soon. So hopefully that also helps with engagement, monitoring, and management. of the tax offices and taxpayers. Okay, let's look at Abuja. Abuja has largely corporates, informed taxpayers, who also have capacities to engage tax consultants and advisors. They're basically government contractors and some other businesses into hospitality and what the city enjoys to indulge in. Kano is a hub of commerce. From time has a history and culture of commerce. So you have a lot more of those in trading, those in import businesses, and those engaged in market activities, grains, and other agro-allied products. Kaduna is a mix and more of an emerging corporate environment with reasonably informed taxpayers who are engaged in both corporate, government-related businesses and merchandising. There's also some hub for past industrial activity. Small and medium-scale enterprises are thriving there. So that's, in a nutshell, what we have under us. Okay, one is to enlighten the taxpayers. Now we're in a situation where we have the new tax laws and also engaging with them to educate them on the responsibilities and how they should carry out these responsibilities, and making it simpler for them to understand and encouraging more voluntary compliance. We're also monitoring to ensure that the proper thing is done, they file at the right time, and they make payments within the stipulated time frames and all of that. So we're engaging with them at various fora and available potential locations and the way they would love to be engaged in. We also want a transparent system, and we derive a lot from what management sends down as the strategy for the year and the engagements with the taxpayers. Basically, taxpayers came here. Monitoring, enlightenment, these are key. So consistency in that monitoring. We also leverage technology a whole lot with Tax Pro. So we're able to provide support and filing and information on a real-time basis. So technology, the people, and the processes in a nutshell, that explains it. Okay, we're about a month on in that responsibility, in the role. And I think the first things first was I arrived at a time when the new law took effect. So we had to be informed by ourselves, enlightened, educated, knowledgeable in the tax laws and the new processes. So we organized the training, and I must commend and appreciate my executive director at this moment and my group director for giving the support and providing all the necessary guidance to be able to achieve that. So staff were trained, we engaged the taxpayers and their representatives. So first we got knowledge in what we had to do, some of the new changes that took place and how they affect our functions. So I feel that's key. One, we understood what the role and responsibilities we're engaging in was, and then we're engaging with taxpayers and ensuring that there's voluntary compliance and filing. Challenges will always be there. Challenges are challenges, and of course they have to be overcome. Now, basic issues are that around data integrity. So you discover that some taxpayers over time, maybe they registered when some of these issues were not issues. So issues of KYC were not issues or were less issues at the time they were registered as taxpayers. And they've carried on with this same information into the new way of doing things or solutions and all of that. So getting to rely on that data sometimes may be challenging. We also have collaborative efforts with other government and non-government agencies, but particularly regards to like GIFMIX, downtime, and all of that. So those are issues that sometimes we find challenging. But by and large, we're working with technology to overcome that and ensure that what we have is what is reliable and dependent and efficient.
Over now to Swateku for what's on the net.
Good day and welcome to What's on the Net. My name is Joyce Wateku. Biodun Bello is saying, good morning. Please, I'm having issue filing for both dollar and naira transaction for same period since Tax Promax is a single train entry. Please, your assistance will really go a long way, sir. Regards. At Biodun, transactions in different currencies for the same period can be filed appropriately on the Tax Promax platform. Taxpayers are required to convert foreign currency transactions to naira using the applicable official exchange rate for the reporting period before filing, as tax returns are ultimately submitted in naira. Where technical issues occur due to system configuration or entry limitations, taxpayers are advised to contact the NRS Help Desk or their assigned tax office for guidance and support. The platform is designed to accommodate legitimate multi-currency transactions within the existing filing structure. Nta Samson is asking, is the stamp duty a banking charge or fees? So why is bank imposing VAT stamp duty, which is like tax imposed on tax? At Nta Samson, stamp duty is government tax, not a bank fee. VAT is charged on the bank's service charge, not on the stamp duty. So it's not really tax on tax. It's just two different charges shown together. Over to you, Laurie.
And that's a wrap on today's episode of Tax File. We hope the discussions and insights shared have been both informative and valuable. Remember, the conversation doesn't stop here. Continue engaging with us through our social media platforms. I am Laurie Bala Hassan. Thank you for watching. We look forward to having you join us again for another episode of Tax File.